We're back here, Patriot Radio News Hour, Joe and Jason on this Thursday, the final show of the week, and what a start to the morning here. Big revision to GDP, which really kind of has gotten the markets kind of all over the place now. I've got markets down, then I've got them up. I had gold down. The markets were down. Now they're all coming back in the other direction, right? The Fed is having interest rates now creeping back higher. The Dow was down 200 points. Now it's up 200 points. Jason, there is so much going on here. But here's something. Another thing that nobody believes. According to the Fed, all the banks have passed the stress test. Yep. They said that $541 billion in losses was their adverse scenario. And I kind of laughed. By the way, 23 banks total have to do the stress test. So when I said yesterday, I said I think it was 30 banks. I was wrong. It's 23. 23 banks. But they all passed. Oh, guess who else passed? You know what was funny? Is Credit Suisse was in there. Of course, they don't even exist anymore. They passed. Yeah, they passed, right? And of course, this was a bank that, well, let's face it, had to be taken over because it was going under. No credibility here whatsoever. And you know what? I wish it would be great if these banks could actually take $540 billion in losses. I would love that. Jason, that's an absolute fallacy. And anybody that believes that is the most gullible person in the world. Obviously, another exercise of futility. It's not even worth the report it's printed on. Obviously, in stress tests, real bad scenarios, there's going to be banks that go under. Say that. Have credibility. Oh, no. Miraculously, somehow, Jason, it won't happen.
Is it the Fed said this, or who did this report?
Yes, the Fed. They did the stress test.
That's interesting. Okay, so that's kind of in direct conflict of. They said that not too many months ago. They said after third quarter 2022 that 722 banks had 50% or more of their assets were toxic or bad, right? So how does that? I guess does that pass the stress test? But I guess maybe they're telling the truth in their mind. Maybe having most of your assets being toxic is. You can still pass the stress test. I don't know, Joe.
Well, let me tell you,
that's
the equivalent. That's the equivalent of the wolf telling you the hen house is secure. Right? Right? I don't know. I got an idea. How about we have somebody that's actually not a bank, not in charge of banks, to actually do these stress tests. Obviously, having the head bank tell you all their banks are great, if you want to believe the wolf, that's on you. But, that was the other piece of good news, Jason. Oh, yeah, don't worry. They can handle $500 billion of losses. Really? They can?
Yeah, it's ridiculous. I mean, of course, the biggest solution to me is always eliminate the central bank. Just eliminate that and let these banks operate on their own 2 feet. And then you'll know who the good banks and the bad banks are. The bad banks won't show you their sheet. They won't show you what's going on. There'll be, murmurs and whispers and rumors, and there'll be stress. And the ones that are doing good, they'll say, hey, they'll just be an open book. Look how great we're doing. Let's face it, when a business is doing good, they like to brag about how good they're doing, don't they, Joe? But we don't get that anymore because it's a controlled Federal Reserve central bank system.
Great point. Yeah, no banks out there bragging about their balance sheet right now. But I thought I'd throw that in there. I want people to know that don't worry, it'll be fine. They can take 500. Well, this was their worst case scenario, $541 billion. Now, interest rates are going higher. We already know commercial-backed real estate. Well, this isn't guessing. We know almost $400 billion worth of commercial-backed real estate right now is ineligible to have their debt rolled over. They're not eligible. In other words, what the building is worth, which is probably less than what you owe, but you're not collecting enough rent to make the new payment. So remember how this works. In order to be eligible to refinance your building, you need to have essentially 25% more revenue coming in than what your payment is. Okay? So let's just say, your payment was $10,000. Right? If you don't, and of course, obviously in these buildings, they're hundreds of thousands of dollars. But just for us simple people, you know what? Let's make it even simpler. It's $1,000. Well, you need to have $1,250 worth of rent coming in. If you don't have that much, you're ineligible. So now, not only do they have to borrow more than the building's worth, so now they got to come up. First, they got to come up and at least give enough money to get to where, okay, it's worth this much. So in other words, if they borrowed $100 million on a building and they now say that, hey, the building's only worth 90. Well, they're probably going to have to come up with $20 million just to get it to where the bank will loan them, right? That's always a rule, right? They're not going to loan you more money than the actual building's worth. But then the payment, right, you got to have at least 25% more. And Jason, now with this numbers that are in today, we are going even higher, which means that payment that they're going to have to make rises. And that's going to put even more of this commercial real estate unrefinanceable. And $540 billion. Heck, we could be there just in commercial real estate in the next 60 to 90 days.
Right, and businesses may be able to run in the red for a while, Joe. But after it goes on for so long, you're done, right? And so, if you were in the red or barely floating, and then this is happening with the interest rates and the inflation, and you go in to try to do what you've always done, hey, when sometimes we need to grab a little bit of money, and this becomes more expensive, it just puts you further in the red. It puts you further down. So you can only do that for so long, Joe, right? After so many months or maybe a year or two, depending on the business. Some businesses can't even go 6 months like this. You can't pay your people, you don't have a business, right?
When we get back, a big 4th of July special coming to you guys. That's going to be next. Stay with us. (800-951-0592) Joe and Jason, Patriot Radio News Hour. We have got a major holiday special. You can go to allamericangold.com and order there. Remember, Patriot, the office, will be closed Friday afternoon. So we're going to work a half day tomorrow. Jason and I will be gone, but the girls will be here half of a day tomorrow, and then everyone will be back on Wednesday. But we've been running Silver Eagles all week. Silver was down, and it was down, back close to $22 earlier this morning. And it's come back quite a bit. It's still down 20 cents here. But heck with it. We're going to run Silver Eagles even hotter today. Rolls of Silver Eagles, which were already so much cheaper than everybody else, $690. So that's $10 off of where we were yesterday. Cases of Silver Eagles, 17,000. If you want to buy a case, that's 25 rolls. That's 500 Silver Eagles. So that's 250 below yesterday. If you buy 3 cases or more, we're going to take them even lower, 16,000. You're going to save another $250 there, $16,750 if you buy 3 cases or 1,500 Silver Eagles. On the gold side, 10th ounce. 10th ounce did not move. Even when the price went down, 10th ounce did not move. 1 through 49, 250. 50 or more, 245. And again, just blowing away people with pricing. $20 gold pieces. 1 through 19. 21, 25. 20 or more, $2,100 on $20 gold pieces at 800-951-0592. Yep, on a day where GDP miraculously doubled. And all the banks passed the stress test. So, Jason, nobody has anything to worry about. This is it. This is when you really want to continue to stack this thing up. Just remember, the higher rates go, the higher gold and silver are going to go. The all-time highs we're going to have are going to be higher because of it, Jason, because it just makes the wipeout that much worse because they know, just like I know, you know now, millions of people need to get fired. And, Jason, it hasn't happened yet, so guess what? Higher we go. Can't hear you. Can't hear you. There you go. Now you're back. You're back.
There we go. If you believe everything is okay and everything's going to be all right, then I guess give us a call and sell all your gold and silver to us.
Sell. Yeah, sell.
We'll gladly buy it because we know more people than not understand that you need to hold and protect yourself. So if you think, I'm done with the doom and gloom, I think things are going to be fine, great. Sell it to us. We'll gladly buy it from you, and we'll sell it to our customers. It's just the way it works, you know. If you're very optimistic and Jay Powell is your guy, then yeah, if you have any gold and silver, sell it to us. But Joe, I have a feeling most of these guys that are listening to the show, they know that if they have it, they're going to put it into gold and silver now, and now is a lot better than next year. I'll tell you right now, it's a lot better than just a month from now. You just don't know when things are going to move. You know, the Ukraine war just happened all of a sudden. You know, coronavirus just happened all of a sudden. 9/11 happened really all of a sudden, right, Joe? Just takes one of those events, and suddenly gold's $100 higher, and silver's up $1, $2.
The Ukraine war was good for the stock market. Let's not kid ourselves. That's a lot of money. We keep turning around. So I'll just remind people of this. Remember what Walgreens said yesterday. People stopped coming. Today, it's General Mills. But, Joe, the Dow's up 200. General Mills shares plunging. A year after annual guidance indicated price hikes were just making everything wonderful, General Mills said, well, even though we're still raising prices, it's not going to be nearly as profitable. Volumes have fallen. General Mills saying that volume sales have dropped 6%, the most significant decline in North American retail markets. The headwinds seem to be growing. So a pretty big decline in volume out of General Mills, kind of following the Walgreens thing here. And again, Jason, I think it's just time. Right? They've bought in time. They should have been raising rates more aggressively. They haven't been because they know why these banks aren't passing these stress tests. There's no way in hell they're passing these stress tests. But again, remember, Jay Powell has said it. People need to get fired, and rates are going to go higher, Jason, until it happens.
Yeah. I do still find it, because we were hitting the break on when I said it before, but I find it interesting. He's like, well, 2% inflation, maybe 2025. That's what he's saying. Didn't he say something about 2023 he was going to get it back there? Wasn't this the year it was supposed to be back to 2%? Then now it's 2025. I get this feeling, Joe, that inflation's not getting back to 2% in 2025. And what is he going to say then? 2027, right?
Sure.
This thing, man, this thing could get real bad for a long period of time. This could drag on for a long time, Joe.
I mean, if Fauci can do that kind of stuff, so can Jay Powell, right? Hey, I didn't say that. No, I didn't close schools. I didn't say inflation was going to be better. Patriot Radio News Hour final segment coming up for the 4th of July. (800) 951 I'm just laughing. Yesterday we had the new home sales, which surprised only the people that apparently whose job it is to cover home sales. Because all of us that don't know anything about housing know the only houses out there are the new homes. Well, today we got existing homes. And once again, Jason, the expert was shocked that existing home sales fell much more than expected. So yesterday they were shocked that the new homes rose so much more than expected. Today they're shocked again. By the way, they also had to revise the previous month's lower. No one's shocked. Everybody knows. Prices are just too damn expensive, and most people are trapped now. I hate to say trapped. That's probably the wrong word, but I bet you some people are starting to feel like they're trapped in their house because rates are so much higher now that you can't afford to move.
And I think existing homes and new home sales, those numbers are obviously connected. You know, if you can't buy any existing homes because people aren't getting out of them, then you only got one choice. So even though the new home prices sometimes can be even cheaper and a better buy for first-time buyers, if you can't buy an existing home, the only thing you can get is a new home. So I think those numbers also kind of feed each other a little bit, Joe.
Yeah, and of course the problem is the existing home market is like 5 times the size, right? So you'd rather have it the other way around. But nonetheless, I don't think surprising anybody out there. The 10-year note continuing to rise, 3.85 and rising. Get ready. I think we're going to have to be ready now for a 10-year note to be well above 4%, which is going to create more stress. This whole thing, the Fed has been behind the entire time. And just more evidence, Jason, even this pause was ridiculous. If they were truly serious about getting, inflation doesn't have to, they don't have to wait to 2025 or 2026 or 2027. That's not in the, I read the mandate, Jason, it doesn't say that. Hey, you can decide to get it down whenever you feel like. It doesn't say that.
Yeah, it just says they're supposed to be on top of it, right? I mean, we did pretty good without central bank in the 1800s. We didn't have any inflation. Maybe that's the model we should go with. Maybe they should commit Federal Reserve suicide and just eliminate themselves, and then they can claim that they did it. Because the inflation will go away. We won't have a central bank messing it up.
Yeah, I know, right? We didn't have inflation for like 100 years. But anyway, it's why Jason and I are in business. Rolls of U.S. Silver Eagles, even hotter now, $690 a roll. Cases of Silver Eagles, $17,000 for one case. If you buy 3 cases or more, $16,750. $20 gold pieces, $21.25. Buy 20 or more, $2,100. And then 10th ounce gold Eagles, $250. Buy 50 or more, $245. Jason, we got you covered. Hey, we got the fractional 10th ounce. If you don't have a lot of money, we've got rolls of Silver Eagles. Hey, if you got a little more money, you can buy in volume and save money. If you want to go big, hey, I want 3 cases of silver. I want 120s. Today's a great day to do that. 800-951-0592. Jason and I are coming back with our final version of the half-empty cup of Joe for the week. We're going to talk about was that really a attempt to overthrow Vladimir Putin? We've got the Professor Glenn Biddle. He's going to weigh in on that next.